All right, what do you say? Let's dive into it. Take a look at
Let's do it.
So kind of a mixed bag. Sterling, again, going out the week, relatively weak. Weak retail sales numbers earlier today started us down, and we're just continuing to roll it. Let's go out to an hour here. And, sub 122 gets us to the lower end of the range.
And why are we seeing this? And I know you mentioned retail sales, but I feel like
I think that's an excuse, and that's just an excuse. At 122, you'd figure, and we've tried sub 122, but here context is if we take a look, and let's just go back to the daily.
Yeah.
We have, we've fallen from just since the start. Let's go back to where's the start of the year here. Okay, so from 126 to, we got down to a low 121 we printed. Did we get a bounce? Yeah, we got a 200 pip bounce, which is a nice bounce. So you got a little bit, if you were buying the dip, you got a day or part of a day to manage that exposure. But when you look at market structure right now, we're going into the weekend. This market hasn't been able to hold on to a rally. So dollar continues to remain strong. And this was a pretty fast move down from 131 to 121, which is almost 8% in a matter of a little over a month and a half. So tape action wise, it's not performing well. We're going, what I mean by that is none of the shorts, if you sold any of these rallies here, even the little one here, you're sitting in a pretty good spot. And you're going into the weekend, who's got the weaker hand right now? The longs. Yeah. Anybody who's longer but dip buying is being,
that's playing the long game here,
you're playing a little, well, you're being challenged a little bit right now as to whether or not you're going to be. So from a kind of just technical tape perspective, it's not acting really well. It's not introducing, again, if we went into the weekend and we were just looking at, if we were like right here, I would say that, okay, we found a bottom and there's some buyers emerging and maybe there's a little bit two-way risk. But when you look at this, you really can't say that here. So sterling continues to be incredibly weak. Dollar yen, actually, we've known the yen has rallied a little bit. BOJ has been talking a little bit about hiking rates after the Trump inauguration, which is Monday. So we have kind of an interesting, FX markets will be open Monday. It is a holiday. Shortened session in equities will be closed, I believe. Shortened session in a lot of other things. So it'll be a little bit thinner. We've got the inauguration. The president will, I'm sure, give a speech outlining what his priorities are. The new president will. I imagine we'll get a little volatility off of that in thinner markets. So dollar yen has been a little bit different than everything else. It is, it's had a pretty good sell-off from 159 down to 156. So that rate story of them possibly rate hiking is playing through a little bit. Euro, it looks a little bit better than sterling did in terms of it's bounced off of its lows. And unlike sterling, which rolled over again, it's kind of held on to some of those. And if we go back and we just take a look at the hourly or whatever,
it's hanging in there.
It is. But,
and that's a sharp climb from when was this, Wednesday?
Yeah, and that was when we got the, I believe it was either the PPI or CPI numbers. We got a bounce. But so you could say it stopped falling a little bit. Tape structure going into the weekend, a little bit better. But we're not, what you'd love to see is a couple, and you can argue almost, Pete, you want to see kind of a exhaustive low and a couple of days of building green bars where you're closing a little bit up on the day. We are ever so slightly, but it just doesn't feel like it's got a lot of upside momentum. But when a market bottoms, it doesn't go from boom. And again, sub 102 was, remember, we were flirting with 110 just back at the start of November. So sub 102 is a pretty cheap level. markets tend to not just rip off of that and go straight back to 105. We tend to bump along the bottom a little bit.
And
We do a little bit of what we did here. Put in a bottom, we bounced to 104, put in another bottom, right around the same area, wrapped around that 102 level, either side of it, and then bounced a little bit. But what you'd love to see is a little bit of this kind of stealth move back up to 3-4 days where we all of a sudden, okay, now we're 150 points off the lows. And this is the case where you don't always need to pin the low, but that is indicating a little bit more constructive tape action in terms of building. Maybe there is a bottom here and we can extend a little bit and kind of revert back into the middle of this range.
And as an experienced trader, do you have like certain price levels in your head for each currency, or do you kind of evaluate more based on where the market is or where it was a couple days ago or a couple hours ago?
It's a great question. I think for each market, you're going to kind of develop levels where you want. The fact, again, I reference 102. Not because 102 means anything. What I mean by that is big round numbers don't mean anything.
Yeah.
Par will mean something. So there I immediately contradict myself. Trading below par, which is 100, 1 euro to 1 US dollar, will be kind of an inflection point. But again, when you look at spot, the big round numbers don't mean quite as much. But I'm looking at where did we bottom and where are we going? For me, going out the weekend, you want to think about, okay, do I want to carry positions through the weekend where I can't manage them on Saturday until Sunday afternoon? And if I'm long, and the market closes kind of weak on a Friday, 9 times out of 10, you're buying if you don't want that event risk, you can take that position off and you're buying them at the same level or better Sunday night. So those are some of the decisions I'll make in terms of where I would want to hold on to positions and maybe manage them and be a little bit lighter going into the weekend with the idea that it's going to be thinner. We've got the event risk on Monday. And when I say event risk, it's just, we don't know. We kind of have a sense of what the new president is focusing on. He's focusing on immigration, tariffs, taxes. It'll be interesting to see what he says, though. It'll be, I think his last inauguration speech ran over an hour, so he covered a lot of ground. So it'll be interesting to see. But when we look at this, I would have to say, too, when you look at, let's take a look at Aussie.
Same, kind of sharper than the euro, like worse, honestly.
It is, and that's a great observation as a new trader. The euro seems like a bottom and is holding a little bit better. This isn't. We're 30 pips off the low. Kiwi looks even sadder.
Even sadder. Yeah, I mean, I feel like we've seen this. This has kind of been a tale as old as time at this point for the dollar. It's like every time I check the news, it's like dollar coming out on top. It's like it's been that, for a while now.
Absolutely. And, we talked about, U.S. rates continue to rally. Well, the last 3 days, U.S. rates have fallen.
Yeah.
Yields have fallen, bond prices have rallied. And they're rallying as we speak right now. I think we're above 113 in the long bond ZB. So, you think, okay, the dollar's softening. Why isn't the currency, why isn't the dollar softening and the other side of the pair here, New Zealand, rallying? It doesn't always work tit for tat like that. I think what that actually tells me is what's going to kickstart this. If we see a 2-point rally in bonds, which we've seen the last 2 days, and we can't and that's where we got this little rally here and this little rally here. If we can't get a rally off of that, overnight, China, good numbers on GDP, PMI, and again, I'm not a numbers guy. All I'm saying is some of the legs of the stool that should cause a little bit of reversion at cheap levels for New Zealand, for Kiwi, are the positive correlation to Chinese markets. So we're seeing Chinese markets bounce. I've got a feeling FXI and some of the Chinese stocks will be higher when they open this morning. Pre-market, it looks like they are trading a little bit higher. Who knows if that'll follow through. But some of the legs of the stool, okay, we're seeing lower U.S. rates. It's not helping soften the dollar. We're seeing China perform well. It's not helping the commodity currencies.
Right, and we talk about China also being, pretty heavily related to the Aussie dollar pair, correct?
Absolutely.
Yeah.
So And dollar Canada continues its, when we looked at dollar Canada when it first took out 142, right at the end of the year, and we traded up through the end of the year to, the 144 level, we had sub $70 crude. We had interest rates higher. Now, U.S. rates are a little bit lower than where they were. Crude is touched $80 basis the front month. Midweek, it's come off just ever so slightly here. But here's another case. What's going to help Canada right now? Canada continues to, I'm sure there is concern how aggressive this tariff stuff will be and how quickly it'll be rolled out. But,
and the new, after Trudeau stepped down, who's going to step in and when that, election, because it has to be before October, correct?
That's right.
Yeah, no, it whoever that will be, it makes me wonder too if they'll want someone kind of with a more aggressive or kind of hawkish stance when it comes to like foreign policy,
right,
especially with economic stuff.
And so we're seeing here Canada actually in the last hour actually trade up from. This is what's a little bit interesting too. Is it at new highs? Yes, but this huge bar is really only 30 pips. It's still 30 pips. It's a move to new highs, but no respite for dollar Canada right now. So we're going into the start of the U.S. day. I don't think we have a lot of macro event risk, but there is nobody being. It seems like traders in the markets are not uncomfortable buying more Canada into the weekend as we print new highs here. So the idea that this is going to get a little bit softer is a little bit troubling as we go into the end of the weekend here. Take a look at some of the cross euro yen. Actually, we've seen euro yen soften a little bit with the yen coming off. Let's take a look at Aussie Canada too. So, or we can look at let's look at Aussie Kiwi. Where's my Aussie Kiwi here?
I do think it's really interesting too. You guys were talking about commodities yesterday as well and how those are kind of connected too. But yeah, nothing really major this week in terms of economic events. It's been kind of boring.
Right.
But, I mean, boring's nice sometimes, right?
It has been. So here is Aussie New Zealand dollar, and we're seeing that actually soften up a little bit too. So Aussie selling off a little bit against the New Zealand dollar. So Aussie continues to soften relative to what's already cheap, which is the New Zealand dollar. So we're seeing this market, again, Aussie underperforming its antipode counterpart, Kiwi, New Zealand. And when we look at that, Aussie actually was performing a little bit better up to recently, but that's giving back some ground. So we're seeing soft Aussie, soft Canada, right as we go into the Friday afternoon. Does it look like we're going to open the markets and you're going to Canada's going to be on sale again, Aussie's going to be on sale again? It does. Then you just have to think about, okay, is it cheap? Yes. Nothing that usually kicks it to the upside is quite working right now, whether that be good news out of China, whether that be better news out of U.S. rates. When the only thing you can say about something is it's cheap, it immediately makes me think, yes, it's interesting, but I'm going to trade it a little bit smaller. Because it doesn't seem like anything is getting it to move here. And on the relationship business, honestly, to go into the weekend, I would probably take a look at, rather than just buying cheap Aussie, I would look at something that might give me a little bit more insulation, like the cross pairs, whether that be Aussie, New Zealand, or Aussie Canada here. Same thing too. This is giving you the exposure to relative commodity currencies. This is something I might look at too in terms of just straight, as we looked at in that dollar Canada chart, just buying something that is really being on a tear, being put on sale in terms of the commodity currency piece. Yeah. So it'll be interesting to see if we can, again, it's not too far to get to these 144.60. We're at 144.30 now, tacking on another 30 pips here.
Yeah.
So should be an interesting day. will euro continue to hold in relative to that, or are we just going to see this dollar bid come into the markets going into it? This January has turned out to be a great month because we've had both sides trade here. Anybody who is the contrarian is getting challenged a little bit here, whether you're contrarian long euro, long sterling, or again, short Canada. Dollar yen, again, breaking out a little bit on its own. Very different. We're not sitting here going into the weekend. We're actually comfortably off the highs. This is giving you a little bit more corrective tape action.
Right.
Where, again, you're not going to trying to pin the highs on this move up here. You would have thought, well, we just ripped from 150 to 155. That's high. It was until we print 156, 157, and 158.
Right.
So sometimes, sure, playing those inflection points is interesting. I like the market to do a little bit of the work and see a little bit of two-way tape action. This is giving you that. We're having a hard time finding it everywhere else.
Yeah, totally. Totally.
We'll see you back here on Tuesday. Take care.